my friend Terrence, there's a general principle here. What happened was, read it to us, Terrence.
It says, on January 1st, 20 corporations purchases 25% equity in Connor's Corporation for $180,000.
Okay.
At December 31st, Connor's declared...
All right, make the journal entry first. The journal entry is going to be this. I'll explain to you the theory as I go. Terrence, all right? Terrence, the entry here is going to be called debit to investment, credit to cash.
Okay, I know that one.
Okay.
Because...
Do that. That's called the equity method, you see.
January 1st, right?
Yeah, with the date. How we doing, Michelle? What's the matter? Entry, you got this utility expense, debit, credit, utilities payable.
The insurance policies for 1 year, so wouldn't it be...
Okay, so now you have something called prepaid insurance. That means we paid insurance in advance. Pre means before.
Yes.
So we paid before we used it. That's called a deferral.
So I'd put insurance expense and then...
What asset got used up?
Prepaid.
Exactly. Then it's a matter of measuring it.
But how do you know what amount when it just says...
Well, how was long was the policy for?
1 year.
When did they buy it?
June 30th, right? June 30th.
June 30th. And what date is it now?
You're not saying.
It's tell you, so that's a good point on a test. So debit that for 180, Terrence, up there.
180?
180,000 credit cash. When was the policy? What date is it now? When on a test, you got to look at the dates. When was it bought? What date is it now?
We're on June 30th.
We're on June 30th. When was it bought?
I don't know.
Or it doesn't say. Okay, but it's a 1 year policy. Probably what it says though, if you look at the problem, the company just started this month. Doesn't it say that someplace? So on a test situation.
Oh, he started it on June 1st, 2008.
So the company just started.
I do not know.
Says it right there.
Oh.
So on a test, make sure you look, because sometimes you might have a 1 month or a 3 month or a 6 month or a 1 year. So you gotta look at how much you're trying to measure. You're trying to measure 1 month. So how much is 1 month? So that's a 1 year policy. How much does it expire per month?
We take 3,000 divided by 12, right?
That's right. That's right. Terrence, move the 180 just to the right a little bit. Ah, well, he's got it there. Okay, debit, investment, credit, cash. Okay, so.
And then it said at December 31st, Connor's declared and paid a $60,000 cash dividend, reported net income of $200,000.
Okay, so now we pay a dividend just like the prior chapter.
Right, so we cash, in this one it'd be...
In this case, dividend, oh, it says they paid cash?
Cash, and then dividends.
All right, so what's the entry? What's the entry, Terry? See how you do on the next entry. That's called the equity method, which means that we have equity in the company. We are part owners of the company, as opposed to the next chapter, if you own like a 5% of a stock, Terrence. Or what is it, actually? Maybe Mike's thinking about this wrong.